Good morning, options traders. So Steve Ganz here, and I'd like to share a concept trade with you. This is going to be an earnings trade on HPE, Hewlett Packard Enterprises. So this is a long-term chart on HPE. This is weekly bars, and we can see over long-term HPE is in a mild uptrend, not a big uptrend, but a mild uptrend. But more important than that, I want to come in and I want to look at daily bars. So if we look at daily bars and specifically come back and look at earnings, we can see that back here a year ago in March, the earnings were down after earnings. But since then, after earnings announcement, move up. After earnings announcement, gap up. After earnings announcement, gap up. After earnings announcement, gap up. So there have been a number of recent earnings that show that HPE has tended to move higher, more so than lower, or more so than staying the same after earnings. So as a result of that, I would be bullish around HPE's earnings. So if I were bullish around these earnings, but again, I don't want to risk too much in this because if I'm wrong, I could be catastrophically wrong. In other words, that could really tank on me. So what sort of a trade might I want to consider? Well, because of the bullish nature, I'm going to come in here to the build model. I could just buy a long call. That might be a way of playing this. But I'm leaning more towards selling a put spread. So, and the reasons for that are volatility is higher as we're going into earnings. So buying a long call or buying buying a call spread is going to cost me more than the risk of putting on a put spread. So I'm going to look at simply selling a put spread in this particular case. So again, I'm looking at a credit spread and I want a bull put spread. So I'm bullish, but again, I'm looking to sell a put spread. The reason again for the put spread for selling it is because going into earnings, volatility is going to be a little bit higher, meaning that I'm going to get more money out of selling that spread. So let's come in here. We'll put in our symbol, HPE. We want to go to the most recent or the soonest earnings expiration, which in this case is September 6th, and then just take a look at what this trade might look like. So if I were to sell a 19, for example, which it looks like this little warning sign here tells me that there's low volume at that strike. So I really would like to have something that's going to maybe have a little bit higher trading volume with it. So maybe do a 17.5, 16.5, something along those lines. Now looking at a chart, again, we're on a daily chart now. Let me just widen this out. So 17.5, 16.5, I mean, that's down here. I think I could probably go a little bit closer. I think a likely stopping point, if this were to drop, might be around the 18 range. There looks to be some technical support here, here, here. So along the way, historically, around that 18 mark, there's been a little bit of support. Now, with an earnings announcement, you never know. But the closer I can sell that short put, the more premium I'm going to take in for doing it. Now that 18 is a little bit thinly traded, so I need to keep that in mind. In fact, both of these are a little bit thinly traded. Let's just look and see how wide those bid-ask spreads are here. 40 to 50 cents. So not horrible, a little wider than I might like, but not horrible. Let's see what this one is. 15 to 20 cents. That one's only a nickel wide. So while it's a little bit lighter as far as the volume, I'm going to be placing a limit order on these when I actually go and put my order out. If I were to trade this live, I would put out a limit order and I would put out a price that I was comfortable getting filled at. And in this case, it would be the mid price. So I'd go at, let's say, 17 cents on the one I'm going to buy, and I would be in the 45 cents. So basically, I'm looking to get around a 30 cent credit, somewhere in that general range. Here we're looking at 27 cents credit, or $27.50, because of course options deal in increments of 100 shares. So that's what I'd be looking at on this particular trade. It's got a decent chance of profit, a 73% chance of profit. My max profit is about $30, $27.50. But if this does tank on me, I have, a fairly significant loss if this were to come down into the $16 range or so. I also have to keep in mind that I have very little chance of adjusting this trade because it's so close to expiration. After earnings come out tonight after the close, if this thing does in fact fall down to $16, somewhere in that general range, there's really not much I'm going to be able to do about it. So I have to risk an amount that I'm comfortable saying, wow, if this thing goes sideways on me, I'm okay with that loss. But again, I've got a high percent chance of profit. And keep in mind that chance of profit is a mathematical calculation that's not factoring in what I just looked at on the chart, which is that historically, at least in recent history, HPE has tended to gap up on earnings. So from my perspective as a trader analyzing this, I'm thinking, yeah, my chances might be a little bit better even than the 73%. The other thing in my mind that maybe improves my chances a little bit is HPE is down slightly today, which means that I'm even getting a little more premium. And if our market overall rebounds today after the sell-off yesterday, this could go higher in earnings as well, which would, of course, be very good for this particular trade. So with that said, I'm going to go ahead and just save this trade. I'll share the link down below for everyone so that you can open up this trade and watch it yourself, see how it performs. So this is a bull put spread, and I'm going to put here on earnings. And there really isn't much to do with this trade. If the market rips up on HPE tomorrow, I will just let this trade go. If it gets up to the point where I have very little additional premium, so after earnings, when the market opens tomorrow morning, the implied volatility is going to drop out of this significantly. And when it does, I could be close to full profit. If HPE opens up here at $19, $20, something like that, in which case I just close the trade, shut it down. If for some reason we're more in this general range, I'm leaving the trade open, waiting for my thesis, my 73%, to play out. Notice that the chance of profit gets significantly higher when that volatility drops out if we stay at the same price point. No guarantee we're going to stay at the same price point. In fact, we most surely won't. But again, the expectation here is maybe a move higher based off history. So thanks so much, everyone. If you like this sort of content, please leave me a message. Let me know if there's any particular type of trade that you might want to see play out. Let me know that as well. And of course, like and subscribe. Thanks so much.